Hey there, welcome aboard. It's Walter here, and you're here at the Naked Forex video. We're going to talk about trading naked Forex. We won't talk about my daughter's artwork here in the background, but that just makes for a nice ambiance, don't you agree? Never mind my neighbor knocking down his house. You can hear, it sounds like there's an invasion and it's, Vietnam circa 1972 or whatever, but it's not. It's just my neighbor knocking down his house. I think the mic's picking up on that. What we're going to talk about here is how your sequence of trades can, one, be anticipated, not really, but sort of, and two, why it's so important. So let me jump into the charts here and share this with you. And if you love this stuff, if this stuff is helpful for you, you may be interested in our course, Small Accounts, Big Profits. You can click the link below this video to get in on that. Okay, so what we're looking at here is a $1,000 account, just like we're going to do in the Small Accounts, Big Profits course. Now, let's say we've got a 37% win rate. Our risk to reward ratio is 2.2. So we're risking, for example, $11 to make $22. Let's say that we're going to risk 3.5%, which is quite aggressive, and we don't have any losing trade or break-even trades. So we lose 63% of the time, we win 37% of the time. We've got 3.5% of our account at risk, which is quite a bit. You can see here, 35 bucks out of 1,000. First trade is a loss. In fact, we get several trades. We're down almost 100 bucks before we get our first win. Okay, so let's roll and let's see what's going to happen here. Now, after about, I don't know, 200 trades, we're only up to 2,000 bucks, 2,300 bucks. We're back down. After 400 trades, we're still around 3,000 bucks. And you'll see here, finally we get some traction after about 500, 600 trades. We're up in the around 20 grand. And then, just curious here, are we going to get any further? Yes, we are indeed. We're in 20 grand territory. I think it looks like we touched 29,000. Back down to 13. And at the end of it, we end up at $21,335, okay? And that's at risking 3.5%, and that's after about 1,000 trades, essentially, which for a lot of traders would not be a very good deal. If that's what you were looking at, you'd be like, not so sure about this. Now, the interesting thing about this is that traders, they confuse leverage with risk. Most traders use what we call like a fixed fractional method of risk management, which is exactly what I showed you in that spreadsheet. By the way, I'll put the link for the Small Account Big Profits course and the link for that spreadsheet, I'll put below or above this video. You'll see it somewhere nearby, so you can download it if you want to see it. What's interesting though is that, well, like when you first, as a kid, when you first understand fire, it can kind of blow your mind. You know, fire can burn you. It's very dangerous or whatever. And that's kind of like what leverage is like for traders, because we can use leverage in different ways to impact our trading. In fact, if you know the story about long-term capital management, those really smart dudes that lost a bunch of money, Nobel Prize winners in economics and so forth, they were using leverage. They were over-leveraged, basically. And so I could use this strategy here, which is basically risking 3.5% on my account, which is quite aggressive, much more aggressive than most traders are. But you can see here, it didn't really hurt the account. And it doesn't really have anything to do with leverage. Those trades that I'm taking there, it actually touched over 30 grand, as you can see here. It went as high as a little bit more than 30 grand and ended up down at 23 or whatever at the end of it. But what's interesting about this is leverage doesn't really matter, right? Leverage is not that critical. You can over leverage your account and your trades, but leverage is just a tool like fire. Fire can cook your food and kill all the worms and stuff so you don't get parasites. I know it's crazy, but true, right? But fire can also burn down your house. And it's the same thing with leverage. Leverage can help you increase your trading account. It can also put you in the poorhouse and you can lose all your money. You can lose more than your money. You can lose all of your trading account, and you can get a bill from your trader, which thankfully hasn't ever happened to me, but that's definitely a possibility. So we're going to talk about other ways to grow an account. I don't think the best way to grow an account is to simply risk 3.5% per trade. I think there's much better ways than that. And those are all what we talk about in Small Accounts, Big Profits. If you'd like to get in on that, you can click the link below or above. I wish you happy trading, and we'll see you in another video. Take care. See ya. Bye.